Welcome to Technical Market Insights, where we're going to dig into the world of stock charts. We're going to look at some of the major ETFs out there. We're going to do an overview of what's going on technically with them. We're going to do some scans and see if there's any buying opportunities out there. I'm going to break this down hopefully very quickly for you guys. Very simple. So no matter if you're a beginner or if you're somebody who just dollar cost average your whole life, there'll be something to benefit you. Even if you're just pumping money in weekly, sometimes you should still know how to read a stock chart to know what's going on out there. So pay attention. My name's Anthony Calhoun, the host. I've been doing this for this November be 23 years. So hopefully I've learned a few things. I can teach you guys to help you make more money in the stock market. Trust me, like Peter Lynch says, you have the advantage over the big institutions by far. So let's, this chart I got up right now is the monthly chart on SMH. Now this is a semiconductor ETF and it holds everything right here. These are just the semiconductors that it holds, everything from Intel. You can go through this on your brokerage account. This is TC2000, something I've used for as long as I can remember. And it should be pretty accurate. Now looking overall, that's Intel. Let's go back to SMH. Now, if you look at this monthly chart, this is something on my website, which is usually where I do this update. July 16th, I put monthly charts show limited growth potential. Why? Look at the monthly chart. So if you look at the weekly, where would July 16th been? It'd been right around here, so probably the weekend after that. And look where we've had almost 8% pullback. You should be able to look at charts and know what's going on. Now this is the daily chart. This does not look bullish by any means. The weekly chart, only good news is it's touched the bottom Bollinger Band and is oversold. So the bottom Bollinger Band is this channel right here. You see the blue lines and the gray. That is your Bollinger Bands. There's a lot of people that just trade just on the Bollinger Bands. It is something you should be paying attention to. It's a technical indicator you should have in your chart, or should I say a channel. So on the weekly, we're oversold. Now I could see, if you look at the daily, it's coming out of being oversold. So I look at oversold according to stochastics, okay? When they hit this under 25, this red line here, that's really under 20. I usually set my alerts for 25 to kind of alert me a little ahead of time. So that is your oversold area on the stochastics. There's a million different indicators out there. If you go to TC2000 and hit this plus symbol up here, it will show you every indicator from A to Z. You can set if you can dream it, you can put it on TC2000, as they say. Now I can tell you, over my 22 plus years of trading, I've studied every indicator on every ticker, both from A to Z. This is what I use. It's simple, and we'll get more into that here in a minute. So if you look at SMH, your semiconductor ETF, now when it hit oversold, I mean, we did rally a little bit. That's the 20-day moving average in the middle of the Bollinger Band. Okay, so it's setting lower highs and lower lows. That's not bullish. All right. Now, based on the monthly chart alone, if you follow my stock twits, really, since this is my first video, the only thing you're going to be able to see any of my past calls are going to be on stock twits on my website, makecashwork.com, or you can find me under my name, Anthony Calhoun, on stock twits. Okay, I called a while back, probably right around here, that we could see 120 in SMH. And let me tell you, I was hated. Okay, nobody wants to hear that. Why did I say that? Because if you look at the monthly chart, we have ran from it being oversold. If you see down here, that's when the monthly chart became oversold. If you were a dollar cost averager, and let's say you've seen this month right here, let's say whenever you took in whether you took profits or you just start piling up cash when it got this high, right? Maybe you just stopped averaging in, you piled up cash for a pullback. Once this monthly's oversold, you should have been just dumping money into this, okay? And it's been up 66%. 66% in 11 months, okay? So to say we can't pull back a healthy 20% to the 120 area, and I picked that based on the 20 SMA on the monthly chart. Now, maybe some novices out there, okay, your monthly chart, every bar right here is a month. Just like your daily chart, every bar is a day. Weekly chart, every bar is a week. So to say this can't hit 120, you know how healthy it would be if it actually hit 120? Now here, to those that follow me and actually trade leveraged ETFs, if you look, you see how this chart doesn't match up as well? But if you would have bought, and that's just because of splits, and that's due to DK and leveraged ETFs, but if you would have started accumulating when this was oversold, you'd be up 107%. Well, right now, 40%. Okay, now ask yourself, is the DK really worth it? 40%. So I trade leveraged ETFs, but I don't hold them for 11 months. Okay, I'm looking at the monthly swings. If you go to the daily chart, this is the kind of stuff I'm looking for, right? I'm looking for getting in when it's oversold here, let's say in April, and I probably would have, I would have exited there, honestly, because it's overbought. Now it's 11% from April 26 to 5/18 on SMH. Now if we go to SOXL, which I'm kind of jumping out of the update real quick just to kind of show you guys the difference between leveraged and regular ETFs. So you got 30%. So that did work out 3 times what it was, what SMH was. But looking at the overall long-term effect, I don't like holding leveraged ETFs that long. If I got to make profit, I will. Let's go to DIA. So this is one I was watching mainly for this 200-day moving average. Okay, I want to know if it held the 200-day moving average, because one of my rules, which if you follow me anywhere, you'll know, if it's under the 200-day moving average, I'm out. I don't touch it. That's my health line for the stock market. This would be for Dow Jones, so that's 30 stocks roughly, but that just kind of flags me to stay out. And here, if you look over here, it dropped below the 200-day moving average, but it came back up, bounced there, bounced there. If you go back to 2022, I was out all of 2022 because it dropped under the 200-day, and it pulled back about 20% as far as the Dow goes, and it was still 6% lower by the time it actually crossed and started trading above the 200-day moving average. Now, there are worse examples. RTX. Look at this. This is Raytheon Technology. Now, I had my long-term account in this right here. It was like ex-dividend area, right? Now, it dropped under the 200-day moving average. I posted on StockTwits. I'm out. I lost 1%, but it's under the 200-day moving average. I'm not messing with it. Needed to swing a couple times above it before I trade it or even hold it. And that saved me a 25% loss. So there's a reason I pay attention to the 200-day moving average. It might not hit everything, but for the most part, it will save you some bloodbaths. And in my book, I go over multiple examples. You can go to one of the big ones, which is Zoom, which this is kind of a COVID play, so it really doesn't. And I still got pictures on here from what was in the book. So right here, crossed over the 200-day moving average, 562% gain in 8 months. Now look here, across under the 200-day moving average, you got an 80% loss over the 2 years. So if you had 10K in there, and if you didn't lock in profit, so here, if you had 10K right there, and you would have made, that would have been 50, but then you would have lost 80% of that. So pay attention to the 200-day moving average. Now personally, there's nothing ever going to be in my portfolio that's under the 200-day moving average. Long term, short term, so I keep 2 accounts. This helps you out on the fear of missing out, right? If you keep a long-term investment account with bullish stocks, really bullish ETFs and bullish stocks, and you got a trading account, if you lock in profit on something on a trading account and the market keeps going up, you're not in the fear of missing out because you still have another account benefiting, right? I'm trying to lock in my profits and hold my profits in my trading account. So back to market update. This right here, as far as the 200-day moving average and Dow Jones, I might sit out. If the rest of the market kind of trends with that, I might be out of the market for a while as far as my trading account goes. Might make some trades here and there. Now, for the majority, I trade leveraged ETFs on the Dow Jones and SPY. Why? Because they're safe. I like keeping my money safe and still making trades. So if I start trading anything, half tempted to pick up a position on the leveraged version of SPY, which is right here, SPXL, okay? So you may be able to pick up, I don't think it'll hit these highs up here. I think you'll probably see, almost like SMH, it might bounce off the 20-day. You might be able to scalp 10, 15, 20% out of it. But right now, nobody is really ambitious about the market as far as like long term. Because if you look at the monthly charts on all of them, now USO, I called a breakout right here, all right, on Stock Twist, and it's up. You could have been up quite a bit, especially if you traded the leverage version. One thing about me, I don't trade trash. I don't trade penny stocks. I don't buy speculative crap. We like keeping our money safe. I'm not trying to get rich overnight. I'm trying to grind out profits all year long, keep them compounding, and just grow wealth over time. Okay, by doing that, I trade leveraged ETFs. I watch charts, and I look for opportunities on single stocks, which we're about to get into. But once again, back to the overall market. If you look at SMH, nothing is really enticing right now. There's nothing that's going to say, especially if you look at that top on the daily, it's going to start trending, and my fear is this 200-day moving average, because that'll keep me out. If you look at it back here, that dropped as much as 34%, and you can see when it crossed back over here, you would have saved 20% by the time it crossed back over on your portfolio, okay? Now, I haven't personally done it, but it's been in my mind a lot. Let's say you wanted to trade a certain sector or a certain ETF. Let's say it's the Dow Jones, okay? If you just weeded out all the stocks below the 200-day moving average, I guarantee you will outperform the Dow Jones. Can't guarantee it, but pretty certain. If you look at most of the stocks, that's kind of bounced. Some of them's kind of breaking out over the 200-day moving average, right? And then some of them, let's look at Nike. I think Nike is one of them that straight took a dump lately. So let's exit out of that. But Nike, okay, it crossed over the 200-day moving average, made some moves, and crashed right back under the 200-day moving average, and is down 22%, okay? If you had a system in place, honestly, let's go back on Nike, because that's what I like. Look when it crossed in 2022 under the 200-day moving average. It dropped almost 45%. That's crazy. So it's quite possible, depending on what the economy does. I don't follow fundamentals because I feel like it's the stock market. The charts tell me everything I need to know as far as what's going to happen, right? Everybody's seeing bad news come out and the market rallies, good news come out and the market drops, right? I don't follow that. I pay attention to what I see on the stock charts. If I see something, so let me show you something else. When I do scans, I scan for bullish charts. So this is actually a funny story. BWXT, I've been telling people to buy this since January of 2023, and it's based on Trezo Fuel, Project Peel, and this came to my attention on stock scans for charts. And then I've done some research. If I put something in my long-term investment account based on the stock chart, I'm also doing research. I'm looking at the price of earnings. I'm looking at dividends to align with the stock chart. Otherwise, I'm looking at the first opportunity to take profit and lock it in. It'll probably go in my trading account. So when RTX, I'd have to pull up that chart. When RTX dumped under the 200-day moving average, which was, let's go to 523. All right. Somebody on StockTwits was hammering me. Shouldn't have sold, blah, 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 blah. And then it actually went up like 2 or 3% since my post. And they're trying to rub it in my face. Like, dude, I don't care. It's one of my rules. Now it's down. You've seen how much it's down since it crossed under. Saved me a ton. And I explained to them, here, what I did, I took my loss, even though I got paid my dividends, I got into ex-dividends, so it really wasn't much of a loss. And I'm not one for taking losses, but I'm not one for holding on to stocks under the 200-day moving average. So I ended up putting that money in BWXT. And I told them that, I'm like, here, there's a winner in my portfolio. I took the one out under the 200-day moving average, put it in BWXT as I buy on every pullback. So I was every pullback in BWXT from the beginning of the year to close to the oversold position or close to it. I'm adding positions in my account and all three of my custodial accounts. And the part that I put in from RTX, up 18%. The losers you want to get out of your portfolio, anything under your 200-day moving average. So let's say you are dollar cost averaging and you're doing some single stocks, which is dumb. You should just do the ETFs at that point. If you're not paying attention and actually being an active investor, you're just passively dollar cost averaging into stocks. If it's a stock under the 200-day moving average, you're probably going to be better off to cut your losses and dollar cost average into something over the 200-day moving average. Your portfolio will grow a lot better. Like I said, hopefully there's stuff in here that'll help out people that just don't pay. So there's active and there's passive investing. Right? Passive investing, you're just throwing money in the market, trying not to pay attention to it, and you're hoping just to get returns like the market. Well, if the market goes down 30%, your portfolio is going to be down 30%. If you're an active investor, you're paying attention, you're managing your portfolio, and you're hoping to make better returns in the market. So in 2022, when the market dropped 30%, I wasn't even in the market. I was piling up cash. I was investing in opportunities outside of the market, which there's all types of places to put money, right? You could, if you dumped a ton of money into the market in 2022 and lost 30%, you know how much more money you would have made if you would have just looked around for opportunities outside of the market to put your money? It could have been dumping 10 grand in a beat up truck and a power washer, having your son or somebody run a business for you, just power wash and driveway. You made more money. Anyway, back to the market. Right now, there's nothing in the market enticing for me to buy besides SPY, which I don't find that really enticing either because it's going on the same path as everything else, right? It's making higher or lower highs and lower lows. That means it's going to start trending down. And if we look at that monthly chart, all the monthly charts, probably like, wow, like who would, even if I'm dollar cost averaging and I seen that right there, I would immediately stop and just start stacking cash and see where that leads me, right? If I got all the cash I've been dumping in those 2 months right there, from those 2 bars to there, and I waited to maybe October, November, or December when this is, you know, a little more healthy, and dump my money there, you're gonna have a way better average, right? Just by watching the monthly charts. So I feel like, my opinion, looking at the weekly and the monthly and the daily, so the weekly's oversold, so that's when you kind of come into a dilemma. Could we see a green bar on the monthly October because we have a few green bars on the weekly, right? That means our daily, that means over the next month, October, we're going to see a trading range in the upward, right? Every week we could close green. It may be an ugly daily. So all the day traders probably ain't gonna be healthy trading for you. You may be able to make some money, but you definitely have to watch the hourly chart. So every principle I'm teaching you, you can use an hourly chart, which You're gonna be buying oversold there, right? Or here. Man, I mean, I'd stay away from all. For one, your hourly chart's under the 200-day moving average, so that's a no-go. If you look at the last time it was oversold over the 200-day moving average, which was right there. If you're a call buying guy, right, you got a percentage gain in the market. I don't day trade. I swing trade, looking for monthly swings or a few weeks to a month, and I invest in the long term with 2 different accounts. All right, so let's see if there's any opportunities. We're going to look at. So one thing I want to do, I'm going to run a bullish scan. This is what I do every weekend. I usually write about it on my website, makecashwork.com, but I'm going to just start videotaping it to hopefully teach you guys more. So I'm going to go into, and this is really off of recommendations and what people have requested. They wanted me to shoot some videos, show them what I do. That's what I'm doing. It's kind of hard reading stuff and understanding. So I'm going to go into my conditions. These are all things I've developed as far as bullish. Now there are pre-built ones on TC2000, which just bounce after pullback is really good. But you can go into TC2000, you can create anything you want, from alerts. A lot of times I don't even watch the market. I got alerts set up. Text me on my phone. This is in buy condition. This is in sell condition. And I'm working. Like, I'm not watching the market constantly. Why? Because I have 2 separate accounts. It keeps me from the fear of missing out. And also I know how to manage my trade. So I keep cash. If I buy something that's oversold, I don't go all in. I might go 50% of my trading account, and that's on a leveraged ETF. If it keeps going down, I keep buying more. I keep averaging my position down, and when it goes up, I'm locking in profit. It's very simple. That's why I call it simplified profits in my book. It's not complicated. Okay, so let's go to bullish. I'm gonna go to new featured watch list. Let's kind of scale this down some. All right, right now we are in the high cap 1000 list, and that is my default list. That's because that is what I trade and buy for the long term, right? I only want to look at the highest 1000 stocks as far as market capitalization. I've traded garbage before. When I first started out, I started buying biotech companies, right? Maybe 6 to 12 months before FDA approval. Man, was following this guy on the internet, and they were all speculative. Don't get me wrong, had some great gains. I mean, there was some I was racking up 100% gains. Might turn 5,000 to 10,000, but then you're in one and some news comes out 6 months before FDA approval, bad news, whether it's about a manufacturing facility or whatever, then that drops 80% like that. So your 10 grand that you just had 100% gain from the 5, you're excited, goes down to 2 and you're starting back over. Don't trade speculative trash. You might have some winners, but overall you're going to lose. It's just my opinion. So high cap 1000, bullish charts. I got multiple bullish scans, so I usually go through them. Now my stochastics here. All right, I want to look at the oversold ones because that's shopping time for me. Let's go through them real quick. From scaled out, that looked like a good chart, but I kind of zoom in a little bit. I mean, don't get me wrong, you might have a good swing trade possibility there, so you may be able to get 5% if it goes to its previous high. To me, one thing to keep you from losing money in the market is always weigh risk versus reward, right? Look at the possible profit you could get versus your possible risk, okay, what you could lose. So you would be entering that for a possible 5% run. But then again, if it changed its mind and kept going down, you could lose 6% if it just dropped to its 200-day moving average. Now, if you manage this properly, it's oversold. So let's say if I did buy that looking for a 5% run, it keeps dropping. Guess what? I never go all the way in on something, right? You want to be able to manage your trade and keep going lower on your average. So I would just keep buying that as it goes down and keep my average as low as possible. For when it does swing up, I'm locking in profits and I'm moving on. I don't like that. Now, Well Tower. This is one I've actually owned this. This is kind of locked in profits. I had some good profits. I think I entered here, collected a few dividends. This is actually my long-term investment account. So this is a RIT. So this is real estate investment. And this is, yeah, I think I locked in like 17% with some dividends. So, because this is like healthcare facilities, like nursing homes and stuff like that. If I want to own a piece of real estate, personally, I thought that was a good investment. But I was up on it, I locked it in. Never get mad when you take profits. So that's oversold. I don't like that candle because that means it went up and got sold off at the end of the day. Then again, it's Friday. A lot of things get sold off in this kind of environment on a Friday. But overall, I do like that if you're looking for REITs. If you're looking for real estate investment in healthcare, Welltower is not a bad investment. I have a feeling there's not going to be many charts out there that are really calling my name as a buying opportunity. This right here doesn't look too bad. Don't get me wrong, guys, and don't get scared just because the stock's $236. You can make 5% on a $236 stock just as easy as you can on a, what was the other one we looked at, a $22 stock. So don't let the price range fool you. I used to talk to one guy a lot, and he was big on only buying stocks under 20 bucks because you can make more money. And I started looking at some of the gains I've seen in other stocks. So let me show you one in particular, which you can see the article on my website, Lilly. I was told people, Lilly, right here, buy Lilly. It's oversold. It's a great company. Look at it oversold down there. You would have been up as much as 36% and still be up 22%. From your previous, you were locked in a dividend by then as well. And right now it's oversold. Again, possible buying opportunity. Anyway, I did exit that position because of the overall market dynamic right there. So yeah, I personally did not hold that stock that long, which I should have. I put it in my trading account. I probably should have added that to my long-term investment account. If I did, I'd still be sitting in it. But there's always trades, there's always opportunities, so I ain't mad at myself. All right, so looking at Carvana. Man, that's tough in this car market. But once again, we're not looking. Fundamentals ain't my thing. I used to trade on news, fundamentals. I've done all that in 22 years. But I stick to the stock charts because that, to me, that tells you everything. But you could possibly see, a 37%. If you look at Carvana right now, that may be one worth a possible swing trade. Because from where it's at now, if it goes back to the previous highs, you're looking at a 37% reward. But then again, if it drops down to the 200-day moving average, you're looking at a 50% loss. Now let's say you had a trading account and you wanted to focus on this trade, go in 50%. Even if you make 50% on that, or 37% on that 50% of your account, you did well. You're making profit. But you're keeping the rest of that 50% to average in if that keeps dropping. Now, if you look at if you drew a line right here, which we can start drawing on these. Looks like a good area for support. You can see Carvana might be a good trade right now. But as far as like long term right now, the ETFs, I'm out. I'm not running. The only thing we didn't go over is Triple Q, which that looks just like SMH. So we can go back to that in a minute. Right now, we're just kind of looking at some bullish charts. It's oversold real quick. Hasbro, I actually posted this on StockTwist not too long ago, saying this may be a good entry. They got ex-dividend, I believe, coming up 10/31. Check me on that. So that could be, that's like a video game company. It's not a place I'd put my money. Not really. I don't want to own toy companies. It's just not my thing. What we got here? This is a financial, Prudential Financial. Not really big on that for a 5% gain. Blackstone. No. Nothing jumping out at me, so excuse me if I'm just popping through these. I'm looking for opportunities that may make us money. Nothing. This is what I do on the weekend when I'm writing stock market updates for the website. I'm gonna stop writing them and start sharing with you guys. And I may actually open a trading account just to trade on this platform on video live for you guys and show you how we do it. Software company. There's nothing really sticking out right now. TJ Maxx, going into holiday season. I think I posted this on one of my recent articles for 13 oversold charts. Going into holiday season, TJ Maxx may not be bad if you want to go for a possible 5% run. KKR. Remember the whole thing. Even if it's 5%, you're locking in profits. You want your money working for you. If you can make 5% on some money in, let's say, a month, that's what most banks will pay you in a year. Most people struggle and strive to make 10% in the stock market in a year. All right, think if you had 160% year just by being simple, just by buying stuff when it's oversold. So it don't take much. I'm telling you, I've done it. It can actually be simple. Lowe's, that actually looks like that could be. I would prefer if Lowe's was touching the bottom Bollinger Band, but it is coming down to this 50-day moving average. It's going oversold. That may not be a bad company to put in your long-term account, honestly. Like Lowe's could be presenting a buying opportunity. Look, if you would have bought it every time it's been oversold previous. I mean, right there is oversold. If you would have bought that, wouldn't even have to average in. You'd be up 5% already. You could add to that position when it's oversold again. This is an asset management company that has been killing it, honestly. ARES. I believe I've mentioned this in a few of my, there's even a note there. Yeah, that's a note from 310 days ago. Now, of course, I wouldn't have owned it there when it dropped under the 200-day moving average, but I believe multiple times I've alerted people every time this has been oversold. Guys, I am curious on one stock chart. So right now we're getting out of the oversold. We're kind of, if you look right here, we're in the 30. Dell is one to keep an eye on. Killed it on earnings. Doing a little sideways movement here. Google is close to oversold. So BRKB, I'm curious on this one. Oh, yeah, didn't do as well. This is Berkshire Hathaway. So I telling people this is oversold, possible buying opportunity. Right now it's down 2.5% since then, which is not. Actually, you could draw a line right there to this previous low. But this is Warren Buffett stock, right? So if you're down 2.5, I would have added more on Friday. If I would have bought this, I would have loaded up on Friday. And you know what? There's nothing about Warren Buffett stock I don't like. Warren Buffett, he knows his stuff. So yeah, I'd be averaging that down right now. I was curious on that because I did alert that pan silver, or no, that's plain, but I don't know why I thought that was PAN. So this is a pipeline company. Like I said, we're out of the oversold condition, so I'm out. I want to see them hit oversold. So like right here, if you would have bought that right there, it'd be up 8% gain. Let's look at ETFs. So we're going to do the same scan, but I want to see exchange traded funds. This is bullish, but oversold, right? Because we're bullish charts right here. We got whatever that is. We're going to get a lot of ETFs I don't really care about. But this is India's earnings fund. Oversold. If you want to invest in India, a little buying opportunity. There's another India one, I believe. Yeah. That's just a non-earnings fund. That's India index. India and Mexico are where a lot of companies are going to be moving coming out of China. So just keep that in mind. It's a fundamental stance, but the charts show bullish activity as well. Spider, this is an insurance ETF. Oversold. Japan, oversold. These are all bullish and oversold. Other than that, there's not much going on. It's a communication, but if you look at the highs, looks like it's toppy. When I say toppy, I mean the last couple highs look like resistance. I wouldn't touch them. So I'm not seeing much out there, ladies and gentlemen. Not at all. Yeah, I mean, we're way out of the oversold territory with those, so we're out. One thing I do want to look at real quick, USO. So this is if oil becomes a monster again, which it broke out there. Are there some companies? I hate when TC2000 does that, so it should give us everything in that fund, but it's not. Whatever. So now let's look at some oversold stocks, right? These are just, I'm going to look at them by change. I'm going to filter by change. I'm going to drag this all the way up. So this is the high cap oversold. And we got 178 stocks to go through. Now, I'm not going to bore you guys with all those. Let's just look at some of the top runners. But I would go through all these real quick on the weekend just to see if there's any opportunities out there. Now, I don't want to, like I said, bore you guys on this video with that. But this is the kind of stuff I do on the weekends, sometimes during the weekday. But I just keep it simple. This stuff I can do on my phone. I got these same scans on TC2000 on my phone, and I can do it on the couch on the weekday. Just look, if I got cash, I'm looking for a buying opportunity, I know how to look. I know what I'm looking for. I know how to put money to work. So do not put money to work unless you know how to put money to work. If you're losing money consistently, just stop. You work too hard for it. This is Roku. I mean, this is, jeez, look at that. Look at that 200-day moving average, ladies and gentlemen. You could have saved yourself 83% loss. Whoever was buying this here and didn't dump it when, man, I feel sorry for whoever. But yeah, and when something gets close to oversold, it's by the 200-day moving average, ladies and gentlemen, I'm watching, just like Dow Jones. I'm not just jumping in, no, I'm patient. Because it might not bounce off the 200-day moving average, it could go right through it. And let's say even if I do buy before it gets to the 200-day moving average, if it goes through the 200-day moving average, just like RTX, I'm not sweating it, I'm getting out. 83%. So if you put 100K in that, you'd be down to 20. Wow. Put 10K, you'd be down to 2. So as you can see, it crossed back over its 200-day moving average here, but we want to see a few swings before we jump in it. So right there, you got one. I mean, you could have entered that swing, but even then it broke lower. That was a 21%. I'm not really liking it. There's not much, like I said, I'm liking out there right now. So don't feel bad if there's not much you like and you're stacking cash, waiting for an opportunity. Because let's say the market, those monthly charts keep going down all the way to the end of the year. You just got more cash for more buying opportunities. Right now, there's a lot of big institutions stacking cash and sitting on cash. Does not look like they're going in right now. Like I think Warren Buffett just sold $8 billion worth of stocks, and he's one that buys when the blood's in the street. Must not be enough blood in the street if he's selling $8 billion worth of stock. GitLab, not a fan. These are some of the biggest change going up. Let's look at some of the biggest change going down, oversold. Not really impressed with anything out there right now, ladies and gentlemen. The oil industry seems to be where it's at. So if you're going to buy something right now, oversold, bullish looking, make it an oil stock. I don't know how long that will stay like that, but medical devices. And this is oversold ETFs right here, ladies and gentlemen. It's changing that change. I mean, there's 110 oversold ETFs in that watch. Let's go to the highest volume. Because, man, that's got to have, I bet that don't have my volume, man. Usually I put a volume filter so I don't get crappy volume ETFs. So all these are oversold. You know these are going to be the highest in your volume. Yeah, there's triple Q. Like I said, we didn't look at that. But look at the monthly on triple Q, along with the weekly. Like I said, rarely you have to look at the monthly charts because they're every 1 bar is a month. Maybe once a month, once every other month. Same with a daily chart. Now, when it was down here, I would barely ever check it. I thought we were going up. That's when I'm making buys and I'm trading the daily swings. Once it got up to this area, put the brakes on. We ain't dumping cash in. Be very hesitant to make swing trades up here. That's a bad look. Look at the weekly. Guys, remember, pullbacks are healthy. That's Brazil. That's your 3 times. That's your leverage we trade. That's a Tesla. They got Tesla Bull 1.5 ETFs. That's funny to me. They got one for NVIDIA too. That's a senior loan. That's Japan. That's just another S&P 500 ETF. So this is XLX. You can see here are some buying opportunities on pullbacks. It's just another technology ETF, but you can see where I've circled it, been there, done it. This is everything it's holding. So guys, I could move that. Bam, buy. I'm holding to it's overbought usually. 8% in 18 days. I mean, most people go all year to get that. I'm telling you. Right now the market's kind of in a rough sideways downward trend. But when that gets done, you could lock in 150% profit a year just by trading leveraged ETFs. Go on by these swings, oversold, bam, look. Okay, you bought that when it first got oversold. It dropped as much as 5%, okay? A leveraged version would have dropped 15%, all right? But you average you got your average. This is just an example, ladies and gentlemen. And then we're gonna go ahead and cut this video. I don't want to bore you guys anymore. Let's say you got your average down to being down 2% or 2.5% because you bought more as it went down, and you locked in 6%. If that was leverage, you locked in 18%. Right? So I'm not rushing to buy anything right now. I'm very hesitant. I'm stacking cash. And guys, one thing else to keep in mind: if you were trying to trade but you owe people money, meaning you have debt, it'd be a good time to stop trying to trade, pay off your debt. Why? Because you are emotionally attached to your money more when you have. I'm a big Dave Ramsey guy. I know Dave Ramsey's not a fan of trying to time the market, which we're not trying to time the market. We're making strategic entries and strategic exits, right? The market fluctuates. I'm not trying to time the low of the market, the bottom of the market. I'm timing a good entry point, and then I'm managing that position, and then I'm locking in profits based on what I've studied for 22 years. I've lost a lot of money and I've made a lot of money in the stock market. And now 41 years old, about to be 41 coming up next month. There are plenty of ways to make money if you know how to read the charts. Now, I'm gonna throw this out there. Many of you might not have made it to the end of the book or the end of the video, but these are some books I've wrote, just to kind of explain better what I do, what I've learned that works best over 20 plus years in the stock market. This is how I manage my long-term investment account. It's just simplified profits, mastering technical analysis, cost averaging, and modern trading. Technology for maximum returns, okay? That's what I do. That's how I manage my long-term account. And this is how I manage my trading account. All right, so there's 2 books. You can get them on Amazon. Simplified Profits. Guys, I'm doing this to try to help people not make the same mistakes I made. There's times I go to stock twits and I try to tell people, guys, don't, I'll give you an example. Stop buying garbage. Look right here, 90%. This guy blocked me on this penny stock. It was $1. I was trying to tell people when it was $1, guys, don't buy trash. Put your money somewhere else. This thing was $1. This guy was down in this picture 44% when I posted. Basically when I screenshotted it already. That stock dropped 90% since I said that. I even told him in one of the messages we was having, because he was so upset, claiming to be a millionaire and it's okay to lose millions of dollars. Millionaires don't act like that, for one. And he was so upset. I'm like, his account was pretty new. He's got me blocked, so I can't go to it. I'm like, when are you closing your account? When this says 10 cents, because it's going to 10 cents. gentlemen, is now 10 cents. So don't buy trash. Don't waste your hard-earned money, right? Be strategic and manage your portfolio, manage your money. You have an advantage if you look around at what's going on, pay attention to the stock charts, and just learn how to move your money, how to manage your money. When's a good entry point? When's a good exit point? How to continue to average your positions. For example, BWXT. If this chart wasn't bullish, like I wouldn't have bought it. Like it's like right there. Oh no, I've been out. Every stock makes or passes above and under the 200-day moving average, right? I want to get them when they're above it and they're trending up. My portfolio, I'm going to tell you, crushes the market. Absolutely crushes it, because I don't hold trash. I don't hold crap under the 200-day moving average. And I know when to lock in my profits and either sit on cash and be patient, wait for an opportunity, or to move them into another opportunity. So if you haven't read the books, if you don't have the books, go to them. Go to Amazon, Simplified Profits, get the books, and learn how to read a stock chart, which all that information's in there. Everything you need to know about the stochastics, every technical indicator I have on here are in the books. Go to my website, makecashwork.com. You can follow me on StockTwits. But guys, I'm just trying to help you. So if you enjoyed the video, or if you didn't enjoy the video, give me your feedback. Leave a comment. Help me to critique the content so you guys like it, so you guys enjoy it, right? I want to make sure everybody's enjoying the content. They're learning something from it, whether you're new or whether you're a seasoned trader or an investor. And hit subscribe and turn on your notifications, because this is going to get more and more frequent. And if I start, especially coming into next year, I'm going to try to have enough time on my hand to be frequently posting my trades. So if I trade something or if I buy something, I'm going to try to make enough time to get on here and shoot a video explaining it. All right, so peace out, everybody. Good luck. Learn to make money, please.